Hi, this is Alessio, and welcome to another update on Bitcoin. Now, in this video, we're going to discuss the two scenarios for Bitcoin, one bullish and one bearish. You may recall in a previous video I discussed already with you these two scenarios, the bullish case and the bearish case. Let's start with the bullish scenario. So as you can see on this chart, we have a potential bullish scenario, which means that the current rally we've had since the start of the year, the current rally from December, has potentially been a wave one of a long-term five-wave uptrend going towards 50,000. So in other words, if this scenario is correct, that means wave one potentially has completed near that 13,800 level, and we should soon be starting the wave two correction, the wave two retracement. In other words, that corrective move down towards the 8,000 to 7,000 levels. And once the wave two correction is complete, then we start the next major wave, 3 towards 30,000, and then of course the wave 3, 4, and 5 towards 50,000. That's the bullish scenario. Let's talk about the bearish case, the bearish scenario, which is the next chart we're looking at. Now, in the bearish case, which I think a lot of people are looking forward to this, including myself, but and when I say a lot of people, I don't mean everybody, just some people. But anyway, bottom line is, in this scenario, as you can see here, the current rally since December has potentially been not a bull market rally, but a bear market rally. In other words, in this scenario, the rally we've seen up to 13,800 from December has potentially been nothing more than, in other words, a corrective rally to the crash or a B wave rally, which could then be followed by a C wave drop, a C wave move down towards the 2,000 levels or maybe even the 1,800 levels down there. And then once the C wave completes, then we start the next wave up towards the 13,800, beg your pardon, towards the previous highs, and then of course towards the 50,000 levels. So that's the bearish case. By the way, I should say there is one more bearish scenario which I want to show you in the next chart. This is the alternative scenario. The alternative scenario simply says that the B wave, the bear market rally, could actually go as far as 20,000, even the previous highs of 2017, before starting the C wave drop or crash towards the previous lows of the A wave. So, and then followed by the major rally towards 30,000, 50,000. That's the bearish scenario. Okay, so we can leave those charts. And by the way, that last scenario is actually a less probable, less likely scenario. All right, guys, so we're going to leave that chart. Just all I want to mention is, as you can see here on this chart, on this weekly chart, currently we're looking as though we're making a corrective move, a correction down to the blue line, the 21 moving average. Now, let's just leave all these charts for a moment. So the bottom line is this. Which of these scenarios is it likely, the bullish case or the bearish case? Well, I would say, let me give you sort of an answer about my own gut feelings first. My personal gut feelings, which by the way, gut feelings can be subjective, I understand that, but sometimes your gut feelings can be based also on experience. My gut feeling personally tells me that given the euphoria, given the extreme optimism, the over-bullishness, the over-optimism and overbought levels, to me this feels more like a B wave rally, a bear market rally, rather than a bull market rally. So we'll wait and see, but for me there's something wrong with this entire rally so far, and my gut feeling tells me there's something not quite right, which could be a bear market rally or a B wave. However, that's what my gut feeling says, and I appreciate you probably thinking, well, gut feelings can be subjective. I agree with you. So let's talk about the facts and the evidence. The facts and the evidence suggest, look, there is a slightly higher probability this could be a bull market rally. Why? Because look, the facts and the evidence and the charts, look, show that we have broken through resistance. We've broken through the 50 weekly average. We've broken through the 21 monthly average. We've broken through key resistance levels, the 6,800 levels, for example. There's still an uptrend on a daily time frame. So as far as the facts and the evidence are concerned, it's leaning towards the bull market. But here's the thing, guys. Everything depends on this correction, on this retracement. So let's wait and see where this retracement comes down to. If this correction or retracement, which we're seeing right now on this chart, but bottom line is, if it comes down and breaks below the 21 weekly average, then, in other words, if it closes below the 21 weekly average, forget it. This is probably not a bull market. However, if it holds the 21 weekly average and continues to go higher, continues to break higher, then it's most likely a bull market. In other words, guys, everything depends on this correction. If it comes down, holds the 21 weekly average and goes back up, it's potentially a bull market. If it doesn't hold the 21 weekly average and drops below it, then very likely we're heading down to 5,000 or 6,000 and probably not a bull market. All right, guys, hope this video helps. I'll see you guys in the next update.